Greetings, everybody. This is Jeff Scott. Every time I say I'm going to stop doing this, somehow I keep doing them. I appreciate all the positive emails and texts that I received. In fact, my wife came in today and about 10 minutes ago and said, "Aren't you doing a video?" I shared some with her, and they were very nice, and I appreciate it. Just to warn you, next week I'll be at the next weekend, what's called ASH, which is the National Conference for Blood Disorders, and American Society of Hematology. And just like the cancer meetings in June, sometimes I don't have time to do my review. The following weekend, I'll be getting back from a wedding, but I should be okay. So if you don't see one next weekend, it's because I'm busy at that meeting. It also means that you could expect to see over the next 10 days a run up in some of the biotech stocks in the cancer and blood cancer, specifically leukemias, lymphoma space. And then after that meeting, perhaps after some initial moves, probably some resting. So I titled today, Will Short-Term Volatility Lead to Continuation of the Bull Run? I did this yesterday before the futures opened up today, and we'll get to that anyways. And one thing I've learned over the decade or so or longer that I've been doing these programs, just because the futures are up at this point doesn't mean they'll be up in the morning. All it takes is one tweet. I think we all know that. But I will say, considering how they dumped on Thursday night after Trump signed the congressional order negative commentary to China about Hong Kong, uh, I think they showed remarkable resilience since then. This is for education purposes only. Anything I recommend is spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. I paid for the tools I demonstrate, and trading involves risk, and you alone are solely responsible for the decisions that you make. I've seen this before. You've been here. These are just some of the folks that were my influences. I started with canceling, really accelerated by Ian Woodward and Gil Morales. And John Person really taught me how to trade with his great signal. Now, I have been talking for months about an add-on that I created. I created it not to share it, but to show John how powerful his indicators would be. His market catcher, his HCDs, LCDs could be in HGSI for stock traders, especially swing traders that rely on intraday chart or daily charts, did intraday. He has agreed, and there will be hopefully soon. So George is finishing up the code as we speak. Then there has to be a discussion about what the business arrangement will be. I would think about a program like Metastock, where in Metastock you have outsiders who create add-ons, and those add-ons are fee-based, where it might be a monthly fee or an annual fee, and it's an optional thing. And hopefully I'll have some information about this soon. For those who know how I trade, you know how important John's signals are for me. And I'm very excited, and hopefully we'll have something good to say about that soon. If I'm on a desert isle that has internet, which is sort of counterintuitive that it would have internet, I'd want my TradeStation Thinkorswim and my HGSI and probably my Edge Rater. I use a number of websites. The SuperiorProfit.co stuff is also very good from Cigar, but those are the bare minimum for me to be successful as a trader. For those that don't have HGSI, who I tickle their interest, there's a free 30-day trial under investing strategies. You'll see hundreds of videos from Ron Brown, myself, and others. I do this to help HGSI. I've provided unofficial volunteer support for years, and I guess I'll keep doing it since the feedback was kind of positive. Stock patterns are cyclical. Yes, it feels like on Monday through Thursday, at least on Monday, Tuesday, Wednesday, I felt that we've taken another leg up in this market. Thursday, or excuse me, Friday, the half day was not a positive day, but it's almost if the big money was busy, not in the market, and didn't come in to rescue, especially the large caps late in the day. As I look at the charts, I don't think Friday was meaningful at all. But it did remind me that volatility does happen even when you think the market's going higher. So I am much more bullish after Monday and Tuesday than I was a week ago, although I still am concerned that we could see some volatility. December is supposed to be a very good month. November was an excellent month, the best month we've had this year since June. But I remember last year, December was pretty ugly. So um, no guarantees, but I'm hopeful that we will finish higher than we are right now. As I said, on Black Friday, we had a sea of red. And again, there just wasn't much volume. And to me, that makes it much less of an impactful day. And again, the futures are up. And Friday's trading really was the first opportunity. Actually, if I get my days straight, Wednesday night is when Trump came in with the information and the futures plummeted. Friday was the first trading since Trump's comments, and as you can see, there was a lot of red. Thinkorswim was not updating. Let me see if it is now. If not, I'll just look at it there. It's updating. Very good. So to take a second here. Perfect. That was a quick second. Just to look very quickly at the daily futures, and I'll look at them in three platforms. Yes, I spend a lot of time on the markets, but to me, the markets matter. And you could see Wednesday, or yeah, Wednesday, Friday's the red one, and the little green one here is overnight futures. We hit a high in the market for the year today. What's not to like in this market? I don't think that's relatively bullish. Bearish engulfing day, maybe a little bit on Friday. Doesn't look really as bad on the cash markets as we'll look at in a little bit. Um, Nice start to the day here on the E-minis, up 9.5 points at this point. On the NASDAQ futures, similar pattern, high of the year set on Wednesday, low of the last least year was set back in December last year. Been a pretty amazing year, up probably close to 30% on the NASDAQ. Again, what doesn't look bullish on that chart? The Dow futures, let me just extend it a little bit. Similar story, high of the year on Wednesday, Friday, and then that's today. And again, a nice run up this year. I think they're up 20% as well. Now, the part that's been lagging was the Russell, but do you notice something on this chart that you haven't seen yet this year? Yes, we hit a new high for the year on Wednesday. This is an ETF, so it's not trading today. That's pretty exciting. But as we'll look at in other platforms, we still are not at the prior highs. The VIX futures spiked a little bit on Friday and have come down equally already in the pre-market or the future markets. I guess it's pre-market now, overnight markets, and the dollar's kind of in its range that it's been. So the futures, as I said, I don't think Friday negates the bullish argument that I still have, although I really still wonder if we're not going to see some more volatility. And on the weeklies, you can clearly see the lower left, upper right, and that from a weekly basis, we hit all-time highs on the E-minis, the NASDAQ future, the Dow futures. And if we go back, we can see it was October of 18 that we hit the highs on the September, October of 18 that we hit the highs on the Russell. And you could see down in complacency today on the VIX. And the dollar has been in a slow uptrend, although for the most part of the last several months on this weekly chart, it looks like it's going sideways. Rates eased a bit, really didn't do much at all, eased a little bit more on the 30-year than the 10-year. Low rates should be good for REITs, MLPs, utilities, dividend payers, and home builders, and bad for banks. Um, we shall see what they do this week. Hard to see this. The yield curve is way above. Here's where the inversion line is. Here is where we closed the arrow point, although we came down a little bit closer to the line this week, really not much change at all. So the issue of recession seems to be quiet right now. The fact that we did invert intra-week, intraday, still means that there could be some challenges ahead, but I think it's nice to see that we did not dive down and stay below. AD lines on both the small stocks and the large stocks are setting new highs. You could see the big move up this week, even with Friday. And you can notice that the small stocks index actually picked up this week. Here are those highs from last year. The large cap stocks are at all-time highs. If I look at the NYSE, you could see that in light blue here, bonds turned up as the interest rates didn't do much this week. And all the other major market ETFs is listed here with their colors turned up with the AD line, which is at an all-time high. Now, for whatever reason, my stocks above the 40-day SMA was not available this week. It showed zero, which is not the case. And you could see the stocks above the 200 didn't change much. It moved up just a tad high, but not overbought. And if I look at the T21, the 3-month or 12-week new high, new low, it's at 56%. When it gets up in the 95 to 100%, I expect a short term very quickly to see a reversal. When it gets down between 0 and 5%, the same. We're smack dab in the middle, so no signal there that should bother me. Now, if you want to be bearish, then just look at the higher highs on the S&P and the McClellan and lower highs, clearly with divergence on the oscillator, and we were unable to make a new high on the summation index as well. So we've got divergences on the daily and the weekly. If I look at my buckets, this is taking all the stocks in the S&P 1500 and looking at where they are within their Bollinger Bands. Less than zero means below the bands, greater than one means up. And you can take top to bottom, divide it into 10 slices, and you could see that we've moved up this week with 58% of the stocks are above the midline, and we're starting to see an accumulation of stock with bands. But very few stocks above, so really no signal. In the Hindys, we did not see a Hindenburg omen this week on either the NASDAQ, the NYSE All Common. I actually got the same picture on the All NYSE this week. So either way, no new Hindys. I can't forget the 5 Hindys that occurred in November on the NASDAQ, the 3 on the NYSE. And we know that in the past, these can lead to market sell-off. We saw them in July and early August as well. But that said, at this point, you got to play the market with that, especially recognizing that the Hindenburg, as I read the definition from stock charts last week, is folklore and urban legend to some. To me, it tells me to be aware. Market tone is a little bit better. We actually had some green come in, especially on the NASDAQ this past week. And on the sector strength, healthcare, technology, and communications turned green, but clearly mixed, and energy remains weak. I like to look at the past leaders, the canaries, and we actually broke above resistance. It'll be interesting to see if we can hold that this week. Know your news and earnings. This week, this is a different picture of the news, as I had a hard time getting my regular source. This is from Market Watch. And if you look through, you could see the monthly non-farm payrolls, probably the big news, the unemployment rate. There are others, weekly jobless claims, PMI, ADP employment, non-manufacturing ISM, construction spending, manufacturing ISM. So there's a number of major economic releases this week. Hopefully the Fed will see what they want to see, which will keep them on pause. Earnings start to slow down, but there's still some biggies here. Coupa Software, one that I lost some money on earlier this year and has come back. Also, Salesforce.com, Workday, Zscaler, so a big couple of days for cloud-based software. Restoration Hardware, Five Below, so some retail coming in this week. Signet Jewelers is one bottom fish that I've been playing. Ulta has been weak as well. So we're getting closer to the end of earnings releases. Certainly a much more quiet week than we've seen. In the lower right-hand corner, I stick to my comment that it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. Now, I just want to point something out. And sometimes you have to, you could have an expectation that, we're going to have, after such a strong year this year, we're going to have a weak year. You can get lost in the news. Elizabeth Warren shows that she's leading. What's that going to do to the stock market? But sometimes you just got to look at facts. And this guy, Chris and Kathy Chivacco from Chivacco Capital Management, CCM, this is their website for their short takes, their blog. They put out probably the favorite video of the weekend that I watch every weekend. He manages money. He has a complicated model to be in or out of the market, and he shares with the public a lot of his thoughts. So this is one of the ones he talked about this week. We've already had monthly MACD crosses, bullish crosses on the NASDAQ and the S&P 500. And he anticipates that we may have seen one. I have to go back and see if it actually did it in November. If not, that we'll get it in January. And he asked the question, how did the markets do after we crossed above the center line of the monthly MACD for the Dow? So he went back, and this is what I love about this guy. It's all data driven. Back to the 40s. And these are the number of times that he found. And there's not many, 1, 2, 3, 4, 5, 6, 7, 8, 9 times in 71 years that the MACD crossed above the center line. And then he looked over 1, 2, 3 months, 1, 2, 3, 5 years. And if you look at this chart, this is an extremely bullish occurrence where at 1 year, every year was positive. Yes, 1953, which I don't remember anything of because I wasn't here, was flat, but we had returns as high as 39%, an average of 18.82%, medium of 16.17, and 12 months after that occurs, 100% of the time, it's positive. After 2 years, 100% of the time, it's positive. So that's a pretty bullish thing. So my point here is don't rule out another strong year in 2020. My other point is go check these guys out. I'm not advocating for their money management. I don't use them for money management, although I'm tempted. But boy, is this guy smart, and I love how he looks at the market. So, strong meeting of the week ended with a whimper as Trump signs a congressional action condemning Chinese government in Hong Kong. For some who still believe that a China deal gets done, this adds to the risk. In fact, the risk was added to it as China said they won't sign a phase one unless they see some improvement in the existing, or reduction is the word that I would use, not improvement, in the existing tariffs. Market, as I said, showed resilience, recovered after initial reaction. Lack of volume makes Friday action a bit suspect. And even with Friday, the indices ended up between 0.6 and 1.7%. News likely will continue to drive market action. And I would have to add to that holiday sales. Divergences are worrisome, but do not mean we have to go down. Considering these and recent HINDYs, I would not be surprised if we trade sideways or slightly down, but turn up again by year's end. So, before I get into my typical review, I thought very quickly, let's look at what the futures are, and I just want to show you what I mean by resilience. The first thing is we've actually broken above where we were when Trump came out, and I'll tell you what we're looking at in a second, because there's a couple of pearls on this slide. Where we were on Thursday the 28th, on Wednesday the 28th, before Trump came out. Actually, it's after midnight. So is it on Wednesday night before Trump came out? Trump came out and signed that bill, and the futures dropped on the NASDAQ from 84.51 and change to as low as 84.08. So that's 43 points on the NASDAQ futures. That's a pretty big move. It recovered before the market opened on Friday and then sold off into the close. And this is where we are today. So you can see a big recovery end of the day on Friday and into the overnight hours tonight. This is a e-signal, NASDAQ futures, and this is AbleSys. AbleSys is just one of the zillions of programs that those who know me know I have way too many programs, but I have them, I like them, and this gives me buy-sell signals intraday. I've been able to, for example, create my Hgsi chart in AbleSys plus more, a lot of different things. And I like having multiple platforms just for redundancy, and each platform has certain things that I find valuable. But what I really want to show you is this lower right-hand corner. This is going back to 2010. When it's blue, it's bullish. When it's green, it's neutral. And when it's red, it's bearish. We have not had a bearish month in almost a decade. This is a long bull run. You could certainly argue that the periods of time here last year, at the end of last year, may have been times to be out of the market. With the monthly bars, you don't get the color final until the end of the month. It just shows you how powerful the market is that we're in. So um, this is beautiful if you're long, the fact that we've had some great recovery from that bad news. But as I said before, plenty of things can happen before the markets open at 9:30 on Monday morning. What might have me worried if I go into TradeStation, and for those who've not been here before, I look at 6 things very quickly. One, are we in a person buy, green arrow, or sell, red arrow? We're in a daily, weekly, and monthly on the E-minis buy. Second, I look at the paint bars. Green is bullish. They're bullish across. Third, I look for these red dots. When I see these red dots, it tells me we have MACD divergence. How do I know that that's MACD divergence? Well, I know the indicator. But if I was to draw a trend line from this peak up to this peak, higher highs, and then come down here, grab another trend line, and go from the peak here in the MACD to the peak here, you got clear-cut divergence there. Typically, divergence ends in a pullback, but you can go on quite some time before that happens, and we've got it on the weekly as well. I look at where we are in the outer envelope. We're below the top of the band, but we're close. I look at my weekly bongo, which is green, and then I look here at my high jump, which is now 93.8%. At this pullback, we got up to 95, 93. So we're at a point where the market's getting stretched, and that's probably the only thing I don't like, plus the divergences. That's the E-mini. If I look at the Dow futures, by the way, extended markets have a tendency to get more extended at 87%, so we have more room there. On the NASDAQ futures, also at almost 90, about the same, 93.51. These are strong markets, again, even with what we saw on Friday. If I jump into HGSI, Typically, the way I start is I go into, actually, yeah, I better not do that. I go into my major market analysis groups. I go into major markets plus. I hit warehouse. That doesn't belong there, so let me kill that. It's killed. Good. And then I'm going to rank these by my top-down view, which emphasizes short-term movement. And it shows me that, ranked by raw content, NASDAQ, biotech, and growth stocks, the Innovator IBD, have been leading. Oil, gas, commodities down there on the bottom. Interestingly, so are semiconductors. I want to open up and take a look at a couple of these. Okay, a few changes here. Yes, you don't have these views, but when you purchase or whatever the business model will be around John's new indicator set, when it comes out, all these views will be there for you. And improve since John will be involved. Not going to spend a whole lot of time on the major indexes. I'll look at the S&P and we'll go from there. But the picture is pretty simple. Open up my charting line, make it red, line. Just make a little line. That was our prior highs, and we've taken it out. I would have thought we would have come back to revisit. I would have thought we would have had some backfilling, and then I would have hoped that we would have held and then gone on to new highs, but one certainly can't argue that this is a very strong bullish run. And you can see right up here that we're just kissing up at the top of the high jump bar. This is the S&P. I'm not going to go through the same exercise, but the Dow, same picture. The line would be over here. The NASDAQ outperformed this week. This was Friday where it gave back some, but you could see them gapped up on Wednesday. The NASDAQ line would have been around here. Same thing, strong breakout. And then the Russell 2000, is broken out of its recent trading range, which is exciting. Still has a ways to go to get to the old high as seen here on the weekly. I like to look at the dollar. It gives me a sense of things like gold. And you can see the dollars really to me, it's sideways. Up on the week, not so strong on Friday. Volatility, as I said, moved up on Friday, but it's already equal and opposite down over the pre-markets. Gold, the dollar holding there, gold has been weak. Because of the increased risk in the market Friday, the gold moved up, and I wonder if this is the beginning of something, or if the futures are that strong, maybe gold doesn't do so well. And if I look at silver, a similar story. What was working, we'll look at NASDAQ Biotech. We talked about some of this last week. Biotech's gone bananas. Now, is that because of buyouts? Yes. Is it because of thoughts that perhaps there's not going to be anything done in pricing this year? Yes. Is it because of innovation? Yes. But there does remain risk here because if they start doing price management in the government, that will not be good for this sector. That's biotech. Semiconductors didn't look as good. They pulled back some, but look at the great move semiconductors had. And then the other thing I want to look at was the Innovator IBD, which are the stocks that we like to trade, growth stocks. And it's not at its yearly high, but it's come off its lows, kind of like the Canaries have. So these markets look very positive to me, with the caveats that I mentioned about all it takes is one tweet to change. Now, I just wanted to quickly look at what gold was doing on the futures. and gold is down $7 yet. I mean, if gold was up on Friday because of the volatility in the market, and gold is down $7 tonight, that doesn't bode well for gold, especially if the markets stay up, but that remains to be seen. Oil is trading up as the Saudis try and pump up the price of oil prior to their IPO. The next thing I like to look at are the sectors or the industry groups. So we have 175. If I look at 2-day force up, you can see only 42 are positive. That's a smaller number than we've seen the last couple of weeks. How many industry groups are down? 30. You can see semiconductor, steel, oil, gas services, banks, autos, base metals, semiconductors, casinos. A lot of these are growth stocks. So the market, again, although I feel strong about certain things, as I start to go down, it's a bifurcated market with about as many sectors up as they are down. If I look at a 5-day window, I see 66 are up and only 21 are down. So perhaps Friday's weakness is throwing my short term, and that we're okay. We'll take it a day at a time, a week at a time, and see where we end up. I like to look, although tonight I'm not going to spend that much time doing this, at the top 10 groups. I leave it by force up, and then I right click, change index group, and the stocks come up. And I like to look at those stocks that are actually behaving better than the index. So let's click on Clovis a couple times. Now I want to make sure that the one after Clovis is Chemocentrics, which it's not, so try it again. And there we go. So Clovis is a cancer drug company. It has a drug on the market. It's probably got too cheap, where I don't know many companies that have approved drugs that trade at an 818 million market cap. Typically, they go to 2 to 4 billion when a drug gets approved. This company's been beaten down. Now it's considered a potential acquisition candidate. You can see it's under huge demand. Big shocker looking at this pattern. For those that follow me, you had 2 kahunas in a row coming out of a squeeze. That's usually when I get interested. That was November 7th. If I go back here, I can see on Friday the 8th, I had a buy signal and a cross of a magic line. So this stock is under intense accumulation. It probably goes higher. But if there's negative news towards acquisitions, the thing will sell off. So buy it at your own risk. Chemocentric popped on good data. I don't chase these. I let them sort themselves out. Medicines Company is a takeout. Arrowhead. This one looks great. It's probably too late to buy, but what a great pattern breaking out here. Certainly a leader. Notice it's got some revenue coming in, although it doesn't make money yet from an earnings perspective. Myovac gapped up on news. It continues to go higher. This is not a bad looking pattern. I'd do some research on it. It is getting extended. It's gone from 6 to 18 in 10 days. This is why people like biotech. This one I thought looked a little bit more interesting. It popped up on news, pulled back. I don't like to buy it on the pop up because this has happened over and over again. Its volume is not great, 550,000 average, but this to me looks like it's something I could buy. It pulled back, started to stabilize, now it's running again. High risk, do your homework. Don't mortgage your family's savings. Actually, I'll use this one for an example. Intercept is a real company. It wasn't a real company in January. Nope. I don't know how many years I have to go back. See if I can even find it. I was this is an interesting pattern. The stock went from $50 the next day to a high of, what was the high here? $497 on this day in a single day. Imagine if you had owned it on the day before, and then on this day it went crazy. But this is a very typical pattern. It pulled back, it ran again. This stock has not seen those levels ever again. It now trades at $108. So it's a real company. It's got products. It's potentially an acquisition candidate. The message on this one to me is got to be careful of this pattern. I kind of like the fact that put in a small little base here before it took off again. I think you can manage your risk better. But these are very risky companies. CRISPR, a DNA editing company, has had a big move. It's probably too late already. And Bluebird Bio, this is a darling of a few years ago. I guess it made it above the list because it had a big move on a bad day, but it's still, I don't think it looks very viable right here. Now, as I've said before, on a lot of these companies, I have non-disclosure, so I can't trade them. So if I'm believing biotech, I'm buying LABU. If I'm not believing biotech, I'm buying LABD. LABU has been really strong, but I'll let you judge it yourself. I think biotech is interesting. It could certainly go higher this week with those blood cancer meetings coming up, but you have to buy it at your own risk. Precious metals. So this is one that I bought because it triggered my little signal. Let me show you what I'm talking about. Very quickly, I'm going to turn off Thinkorswim. And yes, I use a lot of programs, but I programmed into these things that help me make money. And I have a number of machines running at the same time. And I spend way too much time trading. But if I have something that helps me make money, I'm going to use it. And so, I don't see it. Let me do this. So I go into my high-low jump. And what I'm looking for, and you won't see any on Friday, I'm looking for this. I'm looking for a stock that has hit the low jump bar, which means it's extended the most to the downside as it's been for at least a year. And then I look for reversal, a hammer, high close doji. I bought it here. I'm still in Kirkland, and I've had a number of these. I did, Shopify, CMG. So to me, this has just been a dandy little tool of finding things, and I've already asked George to see about building it into HGSI. Doesn't give me a lot of trades, but the trades it gives me, I like. So Kirkland, I'm in it. I think it's not a bad place to be. It's sold off on an acquisition. When I see this here, I ignore it. It just means we don't have data. It's still growing well. It's been with darling of the gold stocks, but like other gold stocks, we probably have to beware. I'm going to go below the index because I like some of the little ones. Here's SPGL, high base, and you look at it coming out. Let me go into the other view. I should have done this before. I apologize. Kahuna, my indicator, mobile breakout from a squeeze. That's my favorite buy signal. 13 new buys came in on Friday on gold. 82% of these stocks in precious metals are at a buy signal. Again, Pan American Silver, sort of a cup, a handle, breakout. Now, again, be careful if the market goes into a big bull run. Gold will be left behind. But there were a number of these that looked interesting. I still have a little bit of AU. AEM looks like it wants to go as well. If you're a believer in gold, why don't you go for the gusto and look at something like Nugget? And, Nugget is pulled down to the 200-day moving average. It had a buy signal come in on Friday. You could certainly be conservative and wait for it to take out the chandelier or take out the 50, or you could buy it just above the current price with a stop at the 200-day moving average. This is a low-risk trade if you do that trade. I'm just not sure it's the right trade considering the strength coming into the market, at least in the futures. Specialty pharma, a close cousin of biotech. Global Blood Therapeutics, they just got a drug approved for sickle cell anemia. It would not surprise me to see this thing run further. It becomes a takeout candidate. It's got a market cap with an approved drug of $4 billion. Very exciting story, especially for sickle cell patients. Look at the volume that came into the stock. Average is 968, and on Tuesday the volume was 6 million. On Wednesday it was 4 million, and it was almost a million on Friday, a light day. I think that the stock has a lot of momentum. Again, it's already had its move, so be careful. Amarin is another stock that I like. They're waiting on an FDA expansion of their label. This is probably a $10 stock if they don't get the expansion, and it's a $60 stock if they do. They're looking at a prevention of heart disease and reducing heart attacks. It's an amazing label if they get it. It's a storage stock. Do your research, but it's pulled back to a place where I think it looks interesting. Akiba, here's one that's breaking out. Looks like a biotech stock. It's in specialty pharma. Again, volume coming in, a couple of kahunas. It's been in a long-term downtrend, so do your research, but it looks like it's changed its character if you want to look at a cheap biotech. This one's already run. This one's got pain meds, so I'm less interested. And then I like this one here, TG Therapeutics. It's another one with oncology drugs. Now, a lot of these, the Global Therapeutics, the TG, the Akiba, they're probably running as we're going into that blood cancer meeting, so be aware of that as well. But this one looks interesting. Pull back here, a bull flag, and it looks like it's running mobile breakout from a squeeze and a kahuna. TG Therapeutics. And then one that I currently own is Axosome. And it's funny, I gave it to you here, or actually here, and then it actually sold off. Became a really good buy down here. In fact, it triggered on my TC2000 scan somewhere down here as well. It's in a nice run here, probably too late to chase. Next group down, and this will be the last one I do tonight because I'm tired, and as you can probably hear, I still got my cold. Too many times on an airplane, I'm afraid. Don't know anything about Nutanix. I like the chart. Long-term pullback, just broke about the 200. It's held for a couple of days. Had a kahuna, mobile breakout from a squeeze and a bobble gap up. I'd probably leave my stop kind of where that chandelier stop is. Under accumulation, that one looks interesting. Shopify, I showed you that in my TC2000 scans. It showed up on this date here. I bought it the next day. It's in a nice run. I'm still long this, although its earnings per share stink. Its earnings per share growth stinks. It loses money, but it really is powering the non-Amazon web-based shopping experience. You can see it's under accumulation with a 2.0. Alteryx is another. So there's a number in this group that look interesting. So I always show you the stocks that I thought were interesting that I'm going to be watching this week. And here is my list. Some of these we've already seen. A couple of them I looked at just because they paid some interesting dividends. Remember why I like Cerence. Let's look at this. Yeah, this just looked interesting to me. It's a, I'll go through the first couple here. It's an IPO. Why do I like it? When I see two kahunas in a row come with a mobile breakout from a squeeze, It piques my interest. It looks like it's got earnings per share growth. It's under demand. Here's another gold play. I already showed you Nugget. JNUG looks the same. Here's a small silver player. Break above the chandelier stop. That might be an interesting play. This is a cheap stock that's just a great leader that I'm already in. I'd wait for it to pull back closer to the 50. Side play is another IPO. Why did it perk my interest? A couple of kahunas in the squeeze, breaking above the magic line with a kahuna on the weekly. Stone Company, this is a payment processor in South America. I've been in and out of this stock. I'm going to watch it this week. It's got good earnings per share growth. Synopsys is a technology play, a wonderful base here. I thought it was going somewhere. It stubbed its toe on Friday. I'm going to watch that, see if it can break out of this consolidation range. Let's get that one for now. I showed you. Well, this is another biotech that looks interesting. Again, a lot of them have the same pattern. They've been in long-term downtrends. And here you got two kahunas in a row with a mobile breakout from a squeeze and breaking above the 200-day moving average and above the magic line on the weekly. It's a flyer. Do your research. Chart looks interesting, certainly for a short-term trade. Clovis we talked about. Fates, another one. Is this one setting up to run? I don't know. It looks interesting. Next show we looked at. Penn National Gaming already looks like it's starting to break out. Good earnings per share growth. Visa's just strong at this time of year. Sprouts Farmer Market, not yet, but is it getting ready to break out here? Mobile breakout from a squeeze. My indicator and a kahuna. And, maybe you want to wait till it breaks out the PSAR. That looks interesting. Cancer Genetics, I can't validate anything about. I don't know anything about this company, but somebody sure likes it. It popped out a week ago, consolidated in a big breakout on Friday. Do your homework. It's an interesting pattern. It's in a good space. I just don't know much about that company. Nutanix, we already looked at. Shopify, we looked at. I don't want to talk about that. Sometimes I do some bottom fishing, and this is a bottom fishing stock. I don't believe it'll pay an 8% dividend, especially when it's going to lose money this quarter. But it broke above its stop on Friday. It does well at Christmas time. That's a Mall Jewelers. It's a cheap stock. I bought some cheap calls. The key site I talked about several times in the last month. This is a 5G play. Here's one of those great dividends. It actually looks like a nice breakout here out of a squeeze, pays a 8.1% dividend. Not that I'm recommending oil and gas services companies, but this one has been basing. It makes money. It's under accumulation. It had a high close doji on the weekly. Worth watching. A couple of small gold stocks. There's your Kirkland, another silver stock. And here's your other big dividend pay, 8.5%, KKR. This is a sideways stock. It doesn't go anywhere. Decimal point changes. It just pays a huge dividend. And I think that's enough of the stocks I like. So anyways, thank you again for the positive comments. Sometimes my wife gets mad at me for doing these. And when I shared those with her, she was very excited. And as I've said before, I stick these into radar screens and I watch for my signals. And that's how I manage that many different buy stocks or buy watch stocks. And then the other thing is to keep in mind that if you do use HGSI, which I probably closed already, I hope not, did I? Something that not everybody is aware of, I suspect, is you can go to intraday, enable intraday. If you have your Thinkorswim enabled, it doesn't cost you anything. And you can have an update on your schedule or manually, and I do complete updates during the day to see what's moving. On that note, I'm going to say goodbye. Have a great week. don't expect anything for the next week or so. Bye, everybody.